Welcome to The Lumber Word, where industry veterans Matt Beamer, Greg Riley, and Ashley Buckold dissect the world of commodity lumber each week. We bring you up-to-date insights on supply, demand, and market trends, sharing our trading expertise to benefit everyone in the supply chain. Join us for informative and entertaining discussions that guarantee to make you wiser about all things lumber.
Hey everybody, welcome to this week's episode of The Lumber Word, episode number 82. We're going into the 4th of July holiday. We're recording this on the 3rd. Hope you're sitting around on your picnic table, your back deck, listening to this, cracking a nice beer, or whatever your beverage of your choice is. We're trying to think what we want to call this one. We're gonna figure that out as we go through this. So let's real quick. Just one quick note. Got some good feedback in one of the news articles on lumber last week, and it was in Fortune, and my buddy Will put it out. And actually there was two. Will Daniel from Fortune put it out, and he linked the Lumber Word. So we had our most downloads in the first week this week than we've ever had on the show since we've been recording it like this. So shout out to Will from Fortune magazine. The other plus or minus to having articles out, there were two. One came out in the Journal, Wall Street Journal, too. And generally, Greg, what usually happens when there's a whole bunch of negative articles on lumber that come out?
My experience in the lowly lumber business that we occupy is that when the media starts paying attention to whatever we're doing, it's bound to go the opposite direction within the next 30 to 60 days after that.
Yeah, generally, once it catches up, that elasticity of information catches up. It's generally after the major move has been made.
Right.
But real quick market update, I'll run through it. And it's great to have Charles DeLaTorre on again. Charles, welcome back.
He's almost like a regular on the show, you know. I mean,
the only reason why I'm here is because I brought it up to Ash. I felt like I got kicked out of the boys club. I haven't been on in like 4 weeks.
Yeah, well, we do that to guests, you know, like, you know, we put them in, you know, kind of like customers do to us. We put them in the penalty box, right? You know, I've been in the penalty box with some customers lately, and let me tell you, I don't like it either, Charles. So good to have you back.
Yes, sir. Thanks for having me.
Yeah, it's great. So,
Ashley, I have a question for you.
Sure.
Going right into the lumber thing, you sent an email to me about the commitment of traders. You want to go over that real quick and sort of explain what I'm reading?
Yeah.
Because I act like I'm in third grade because I basically have the brain of a third grader.
So I like looking at a few different reports. Daily, I look at the daily bulletin to look at volume and open interest to see how many people had their foot on the gas pedal and whether they had their foot on the gas pedal because they were getting in or getting out, how much volume and so forth. And the commitment of traders comes out, and I think it has, I don't know, something like a 5-day lag to show who's all the people walking around the game of musical chairs, right? Who's long, who's short, and then we try to deduce, is that a right way? Is that correct?
That is correct.
We try to deduce what is actually going on and wade through all the BS to see who all the players are. So what I did was came up with a chart, or actually I just I put the raw data up here since January, for the first week of January. And what the commitment of traders report does, put out by the CFTC, it shows what bucket or what type of entity was either long or short, what their change was over time. And so the ones that I'm really interested in are the producers or the industry, because they're technically always considered in all commodities smart money. And then I looked at the managed money. And the reason I looked at managed money, I wanted to look at the two largest trading buckets. Now, one interesting thing I think everybody should be aware of, just because somebody's in the producer bucket, long or short, it doesn't necessarily mean that they have lumber behind it. It should, because I think you pay a lower commission as a producer for your margin. But I think anybody that basically buys a truck or car of 2x4s can say that they're a producer and fit into that bucket.
So you're talking industry long versus outside industry short.
Yeah, but there could be some big swinging player in the industry that doesn't have any lumber behind it, but has enough dough or wants to get long or short and falls inside of that bucket. So I think we have to be or there may be somebody at companies that decide they want to be long or short spec and maybe throw a couple extra thousand in one of these, right?
Yeah.
So, which is, I don't know the ins and outs of the why, where's, or how's of that, but that's one thing. But I think you just want to look at on this particular one.
We've been talking about this for like the last 2 months, is that funds have been short and the industry's been long, and it hasn't changed. And we've rolled 2 contracts now, and all the funds have rolled their shorts and keep making more money, and all of the longs have rolled their longs and keep losing money. And we're here today with the roll at $40 a thousand to September. September's a $50, $60 premium to where the cash market's trading. So you tell me. It's like I always say, stop. I mean, when I propose a position, if I stick with it, eventually I'll be right. It's just hopefully I got enough money to wait till then.
Yeah. So the interesting thing about this, and as Greg said, if you also notice, people aren't just rolling to September. It looks like there's a few people trying to roll out into November also. So the producers, if you look at it, when we were up at the Montreal Wood Convention, you're coming up through March. All of a sudden, the producers were long, or excuse me, were short.
Not
actually.
Producer. It's commercial. It's
commercial.
You're either a producer,
you're
a commercial end user.
Yeah, I just put producer.
Or a distributor. Like we're in there.
Yes.
We're in that bucket.
So I put producer. I think so. It would fit inside the Excel cell. So if you look,
at least you're honest, buddy.
I renamed it myself. So you look January 2nd, 2024. We're coming in the beginning of the year, and producers were short. And if you follow it all the way down, basically till after the Montreal Wood Convention, April 23rd is when they started getting out of their short and getting long, which is a head scratcher to me because they were short the whole way up in the market, right? And
also at Montreal, you and I both commented afterwards that we thought it was maybe a little darker there than what we expected, right? I mean, we came back from that with a feeling of, hey, there's some potential issues coming up here.
Yeah, and what happened was the industry got long.
Honestly, I don't understand that.
I don't either. I have my own suspicions. And they stayed long even up until the last commitment of traders on the 25th here, and the managed money stayed pressing them short. They kept adding to the position. Like, it's crazy, right? It's amazing. I mean,
that was in March or April.
This is as of last week.
I know, but I'm talking about like after the Montreal thing. Was that in April or March? I'm trying to remember.
It was in April. It was in April.
They started transition along at the end of March. I mean, if you look at the data, I mean, it was slow at the beginning of April, but then it transitioned pretty quickly as they got through April, went into May.
It's crazy.
We didn't start talking about a rally until May, right? We that was after prices had come down, and we figured, hey, it's we're probably get a bump here. Yeah. It hasn't materialized yet. We've actually gone further down, so we've been a little bit off target here in terms of our timing. But at some point, a little bit. But you know what? Hey, it happens to the best of us, right? That's why we hedge. This is why we manage our positions. And so,
like the conversation I had with the head office today, I'm like going, hey, yeah, you know what? Listen, mistakes were made. I got nobody else to blame but myself. I effed up, and it's gonna be a rough summer.
Well, I mean, I'm in the same boat. I never hedge 100% of my inventory, but all you can do is just fight, and then survive for a better day. And that day will come. Trust me. I mean, there's a lot of people in the business right now, whether they're individual traders like me or you or Ashley, or companies that distribute lumber actively as a business model, they're going to reduce their inventory over the next 90 days significantly because there's not enough of a margin in it. And so we're going to get into a situation again where all the inventory is either at the sawmill or it's in the retail hands. It's not going to be sitting in the middleman's hands because there's not a margin in it. And so, these things correct themselves. We're going through the correction process. This is why we hedge, right? This is why somebody like me or Greg maintains a short position against their inventory, because you just never know. You can be the smartest guy in the room. You can have all the best instincts. You can have 30 years of experience and you can still be wrong. And you always have to have a contingency plan for being wrong. Like, you should always consider your business from a worst case scenario. What if this happens? And then if that does happen, you're not surprised, you're actually ready for it. So when you make a mistake is when you become panicky. You should never become panicky.
This is an emotional decision.
I'm feeling so
at that
panicky
point.
right now. I need a day off.
But
Dude, it's 4th of July, man.
So here's Matt, you hedge.
Go golf.
Matt, you hedge. I mean, full disclosure, we've been hedged pretty much the whole way down with basis. And you hedge, Matt, I hedge, Charles, you hedge. But look at this. There's 6,048 industry long and 2,434 short. So there's not a lot of people hedging. 2,434 trucks, when you think about all the wood in the ground all over North America, isn't very much. There's not a lot.
This last leg down over the past 3.5 to 4 weeks is going to upset a lot of apple carts. I mean, it really is.
It's upsetting my apple cart.
I don't have an apple cart anymore, Greg. How about that? Oh,
yeah. The bank repossessed it.
Not yet.
You buried it in the backyard.
Because I was hedged. I was hedged.
So let's switch over to markets. But that's one of the things I've been watching that's been pretty fascinating. And I think what happened is, I could be wrong on this. What happens in a thing like this is there some forward pricing against the long producers? I'm sure there is. There's some, right? Mm-hmm. Is there that much forward pricing against the producers? No, I doubt it. I have a feeling that there's a couple entities in there that have been long and probably have enough dough to keep rolling it and enough hope to try to get it going again. But maybe I'm wrong on that. What everybody looked at it was market structure and the feeling that, managed money is short. They're going to buy out and run this thing $100 and we're going to be there to catch it, right? But it didn't happen. Managed money kept staying short and rolling their trade too. Like Greg said, I was surprised that nothing ever happened on that roll. Greg, we said, what would we...
I mean, you think about it, is that like rolling March to May and May to July and July to September, like if you did like a great job along the way there, maybe you got that done somewhere between $15 and $20. If you did a lousy job, we rolled July, September yesterday or the day before at $40. So it's somewhere in, let's just call it a $40 to $80 1,000 that you've given up rolling that trade.
Yes.
Yeah. Sounds expensive.
It's a lot.
Sounds like a lot. Yeah. 10 to 20%. Yes. That sounds like a lot.
So what I want to real quick is go over the market, and I wanted to highlight some pine too. And then Greg, talk about your LinkedIn poll that you put out yesterday. So the market this week, we did have a little bit of a solidifying, I should say, or toning up of the futures market. It got a little bit of a bid, but from what I've seen, some of the low trade cars on the cash market are gone, but we're still talking to mills and able to buy well under print, even the adjusted print numbers from today. Heard some rumors of what some of the big Western mills were offered that they said no to. Again, when you hear it third or fourth person, who knows on that one? I heard some guys were offered 300 last week, but didn't take it because for whatever reason. Matt, I've heard of some number 3 trading a little bit lower on counters in the spruce market, but I feel like some stuff has been done. So in the spruce market and the Eastern and Western market, it seemed to be still ample wood able to buy. Matt, what about the U.S. species and Western spruce, what you deal in?
I mean, this is going to sound like I'm lying, but I'm not. We've actually had a good 5-6 day stretch here, both in terms of mill sales and inventory sales. So we've been able to, before the quarter ended, we cleaned up a lot of clinkers, a lot of that scratch and dent stuff that I always talk about. You should manage your inventory, especially when you get to the end of a month or end of a quarter. That really takes a lot of attention from the back offices. So we were very successful in that. But we also have sold a lot more milk production here in the last 5 or 6 days. We're not getting as much pushback on like the bread and butter stuff that people are inquiring. If we quote it generally within their target zone, they just buy it. There's not a lot of, hey, we need $20 extra type stuff. There's no sport counters at this point because the prices are already so low. We're selling spruce in the $430 to $460 range delivered anywhere in the United States. And then, You've got Hemfer trading from 440 to 465, let's say, also, into the markets it's trading into. Our biggest concern, I guess, looking at the market from internal at our company right now, is we just have something I alluded to last week. There's just more two-before than anything else. And it doesn't matter if it's green or dry. It's just, that's the main focus. We have more, and it's dimension. It's not studs. Our stud position is much better today than it was 2 weeks ago. We've actually had a really good, I wouldn't say rally, but we've had a good liquidity volume rally on studs in the last 2 weeks compared to the previous 2 weeks. So I feel like going into the holiday, from the mills perspective at our company, people are able to take a breath now. The hard work's been done, and people are optimistic. They're happy to have an extra few days here to go relax and spend some time with their family without freaking out about mill inventory levels being too high, without having cars loaded that they have to blow off. I mean, we've done a very good job at Hampton of managing our mill production. And when we come back from the holiday next week, we're going to have some more 2-before stuff to sell people and dimension, and that's it. And we sell a dozen or 20 cars of all species, dry and green, 2-before, we'll be perfect. That's a manageable position for us. We're not sending lists out begging for offers at this point like some other producers are. I've seen some horror stories. I've seen and heard and talked to some of the other mills that you were just referencing there, Ashley.
Yeah.
They don't know,
am I
what to do.
Am I close on those numbers that I said? When I said 300, I meant Vancouver, so that'd be 414, 415 Chicago.
I've heard that, yes. I don't know if any of it's true or not true. I don't really care at this point. I mean, I look at it this way. There's still a basis. There's still a basis in the board. So November's at 500 right now. Well, I mean, if you're a sawmill, why wouldn't you just sell that blindly? Just sell it. I mean, why wouldn't you just sell the July contract at 450 and then ship it? If you're willing to take 300 mil, why wouldn't you just sell 200 contracts at 450 and pick up an extra $30 to $40 a thousand for your sawmill and actually ship the lumber?
Yeah, I mean, where Greg and I run into some of these mills that put wood on the ground in the Midwest and are trying to distribute. That's where I hear.
And they're not doing a good job. They're just dumping fiber.
They're basically asking to take any order they can. So
yeah, it's terrible. Their business model is completely broken.
Greg's thought process always, whenever I want to give something away, since I've been 21 years old, he said he can hire anybody to sit in a seat and give lumber away. Doesn't really take very much to do that, right? You kind of get paid to get your best price for it. But I've heard a lot of pressure there. Charles, Southern Pine, like, we haven't had you on in a while. What's going on in that market?
I think Southern Yellow Pine was a canary in a coal mine for the past 6 to 8 weeks. And I think everybody else in alternative species are finally feeling that to a certain extent. And I mean, the pine market, as we discussed before we went live, every market had that extra leg down of $50 to $80. And there's a lot of people that are still sitting around kind of questioning what the next move is. I think, we had a little bit of a firming tone as well in pine, but it's not, it's a liquidity move. It's not really a price move, right? It's people saying, okay, I can buy at a price and I can't go wrong, but I'm only going to buy for the next 3 weeks, right? Or whatever the case may be. So it's very simple and short-sighted because there's no reason not to be.
Yeah. We noticed, Charles, Greg actually pointed out today, and hey, there's some items now that are closer about as close as they've been on spruce and pine. Spruce is is getting competitive again.
It is.
I see yellow pine at like starting with a 2 on the major 2-before and 2-6, right, Charles?
Yeah, except for your long links. I mean, your 14s and 16s. Some of the things that some certain mills have done to kind of remove some production and cut and shifts and what have you. The longer links. If you're a big buyer, mills are getting you to take 12s and 10s.
I have a question about the yellow pine. Last week we had that guy from Madison's on, and he was talking about mills were still barely profitable or barely losing money. Do you think that's true in yellow pine also?
I think everything is not as bad as we think it is. But if you look at and a prime example is if you look at your major producers, and we all know who they are that are publicly traded, and you look at their Q4 financial results, and then you look at their Q1 24 results, there's a huge difference as far as, losses. They've picked up major dollars. I don't know how or when or what, but they've gotten a boost of confidence, right? But, at the end of the day, you've got some variables in there that I think are going to come to play a little bit faster and harder at the end of Q3 and Q4, such as logging contractor population, et cetera, to where it's going to be harder to get logs because, mills aren't paying anything for them down here, and it's a free market. It just is what it is.
What happens when the consumption of lumber falls in the third and fourth quarter?
I think your log prices they'll probably stay where they're at now because you're going to have a reduction in logging population. But I don't know, because there's a lot of historical or legacy organizations that are still moving large volumes of raw material, honestly, through the supply chain, especially in the state of South Carolina. There's not a diversified pulpwood outlet. So some of the mills are able to buy super pulpwood at discounts compared to saw timber. So it's kind of working out to their favor.
How's that market trading, the pine market? Is there still a counter off of in that market, Charles?
You got to buy big volume, and you got to be able to take it today.
Okay.
If you want to counter. There's not much room. You can look at print and see where levels are. And 3 weeks ago, it was $30 to $40. Today it's $5.
Yeah.
So you can't, you're selling number 2 on a composite average at what? Call it high 2s on 12 and shorter.
Yeah.
So it's difficult. And I talked to somebody I know, and he mentioned that, sawmills, based on current log prices and some of the pulpwood things that I mentioned, in specifically to the markets in South Carolina, that log cost has dropped considerably.
Charles, are there people that would want to actually store some lumber at these prices for 6 months? 2x6 at low 200 seems like a heck of a value.
Yeah.
Should we talk about our backyard chat last week, Charles?
Yeah, we can touch on that.
Charles and I figured
I don't know a dang thing about yellow pine, but I'm just a guy asking questions.
It's no brainer levels, right? It really is. But you've got to get some sort of 6 month appreciation, and if you're looking at lumber consumption staying steady the way it is or potentially dropping, I don't know if a 6 month buy is really it. But if you're looking into Q1, I think 25 might be the flashlight that we all need to kind of follow, honestly.
And then that's also, making that assumption or question here. Some people probably have already done that at some point, much higher than this as we've ratcheted down, right?
That extra leg hurt a lot of people because 6 weeks ago, if you were getting a $40 counter on print, let's say number 2 material and 4-inch was mid 3s, right? That's a pretty good deal if you look at it from a historical perspective and your total input costs going up 25 to 30% based on everything that happened after COVID. And there's a lot of value in that in general. But if you look at 6-inch, 6-inch, I remember, these levels are reminiscent of 2017. And to Greg's point, looking at that Fred chart you sent, that's about correlation as far as housing starts that we're at.
We'll jump over to that Fred chart in a second here, but great feedback on the pine, Charles. I wanted to say, okay, Greg put out his LinkedIn poll this week and pretty interesting feedback. And Greg, I was going to have you talk about that and then maybe talk about, are we there? Are we going to make a turn here, or what are you looking for to make a turn after reading the poll data?
So, I feel like I've got severely diminished, credibility because for such a long period of time there, I was saying, hey, lumber prices were going to be higher in July. And, that was built on this premise that, we were going to lose production because we were below the cost of production, summer shutdowns, et cetera, less European production. That was a gross miscalculation on my part. Number one is, well, whatever production we've lost, it obviously hasn't been enough. And the consumption numbers, clearly based on housing starts, they've trickled off, and they may have trickled off more than people anticipated. So that having been said, the lumber prices have been down, like we said, since late February, early March, 3.5, 4 months. And my poll was, when will they stop? When will they stop? Please Coal still actually has 6 hours left. So, but I'm not expecting a dramatic change. This week is the low, 16%. Over the next 30 to 60 days, 42%. Won't bottom until September or October, 42%. 84% of the market don't think the market's, it's like 30 to 90 days before prices will bottom out. The contrarian in me says that this week's the low. That's a hard call to make today.
Well, if you look at the market, we were waiting for either a capitulation, open interest falling 2,000, long liquidation, never happened. Everybody rolled, looking for the basis to come in. Every time it came in a little bit, it went back out again, or combination of mills just throwing in the towel and taking whatever to move everything. But we really haven't had any kind of rally for how long now?
4 months.
4 months. So you could say that was just one long 4-month capitulation.
Death by 1,000 paper cuts.
I don't know that capitulation kind of signifies that you have a climax to the event, and I haven't
seen it yet. Yeah. What do you guys think? Is this week the bottom of the market, or is that just too early to tell?
There's only 2 ways to pick bottoms, Ashley.
From my experience, July is horrible anyway.
By accident?
Yeah.
And by accident.
Yeah.
Oh, that's right. No, there's only 2 ways you go broke: trying to pick bottoms and trying to pick tops. Right.
So, what were you saying, Charles?
If you look at it historically over the past 10 years, July's historically been slow, right? I think you're getting affirming because people are buying because they're going to be out the rest of the week. You have some natural ebb and flow that's kind of tied to the 4th of July, but I don't know that we'll put maybe a reported level bottom, right? Because there's not much more downside here. To your point, Matt, 6 inch at 2 with a 2 handle, in a warehouse for the next 6 months, how can you go wrong, right? There's not much downside risk. So the real question to me is, do we find some sort of normalcy in these $30 to $40 ranges at such a low number? And that's going to be difficult for a lot of people to trade if that's the case.
Yeah, basically.
I look at the cost of production and the cost of the log and the cost of labor and cost of insurance and electricity and transportation and hiring people to sell your lumber and blah, 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 blah. It's for sure up in the last 5 years, right? Everything more expensive now than it was 4 years ago, everything. And I'll be curious to see the reaction in the boardrooms of North America on August 2nd when they start looking at July results, because they're still in June, they were given, half a month's worth of better orders. When the bottom falls out and you guys start taking $50 counters in the back half of June, that doesn't really show up until July. So you're going to see some negative red results here on July 31st that the reality is going to set in. It's kind of like when you're trying to lose weight and, you cheat and you gain 5 pounds, and then you get on the scale the next day and you're like, God dang, I shouldn't eat that pizza and ice cream. Well, I think the mills are going to have that feeling on August 1st. They're going to be like, I wish we hadn't had to take all that. These are horrible numbers. We're going to have to do something, Until then, I think we're just squabbling about, ship time and price and tally for the most part. And it's mainly just centered on 2x4. 2x6 is super cheap in yellow pine. There's nothing in North America that's even close to that price in 2x6. Nothing. Not even close. Hell, you can buy yellow pine number 2 for less than what people will pay for number 3 spruce. 2x8, 2x10, and 2x12 remains very liquid because there just isn't enough of it being produced in North America. And the constant ebb and flow of that production is just taking care of itself naturally. So the one thing that people have to worry about is 2x4 dimension primarily. Some studs will probably resurface as we go through July, but at these numbers, these sawmills are in for a rude awakening at the beginning of August. So I feel like we're just skipping around on the bottom here, really. Honestly, I don't think it's going to get much worse than this. My personal gut feeling here.
It can't.
Does that mean that I'm going to go buy a bunch of lumber? No, it doesn't. And that's one of the reasons why I think it's going to get better, because I think people like me and Greg and Ashley and Charles are going to start reducing, if we haven't already, which I already have, but I plan on reducing my inventory significantly compared to where I could carry, right, over the next 30 days. And I'm not going to replace that wood. Why should I? There's no margin in it. The most money I've made all year is my hedges in the board. Why would I replicate that? I mean, I could just keep selling the board. I don't need the inventory. We'll see how things turn out, but I do feel like we're just kind of skipping along the bottom here. And there's going to be a lot of people out next week on the inland side, by the way. I'm one of them, so I won't be. Maybe, Charles, you can go 2 for 2 and take my spot next week, but I'm going to be in Idaho with a lot of other people.
That'll be an interesting time as everybody gets together out there. Historically, everybody just is like happy to get together, and there's not a lot of market talk, but you'll get a better sense when you get back for sure.
Last year when I was there, everybody was giddy because we had a July rally, remember?
Yeah.
And I said, I want to sell, and I did. And then this year, I have a feeling it's going to be the exact opposite. I think there's going to be a lot of mills with their heads hanging in. What are we doing? It's going to be kind of doom and gloom. It'll still be fun to get together because it's always good to see people that you only get to see like once a year. And the weather's going to be hot. It's going to be fun. But at the same time, the giddiness that people had last year, that'll be out the window.
Yeah, and the availability for anybody standing at the bar to pick the tab up is always tough in a situation like this too. That's generally when you tell it's a tough market. Well, let's
everybody goes Dutch.
Everybody gets alligator arms.
That's funny.
Lord.
So I wanted to chat. Like we pulled up a St. Louis Fed private housing start units from 1960 till now, because I was chatting the other day. I said to Greg, I'm like, is this how far do you have to go back? Say, this is trying to spin this as a pop. This is one of the worst lumber trading markets since a long time. I said, how far do we have to go back to really think about how tough this market has been? But with that said, like Matt, you and I talked yesterday, and even in as bad as this market is, you still have enough liquidity where if you need to do something, you can get on your belly cheap enough and move some trucks or cars. But how far do you think, if you look at this Fred chart and pull it up, we can look at the data. We went from a high in the 70s. Greg, you were saying that was more on a multifamily type of tax deal to almost 2.9, 2.4 in like 1972, 71, 72 housing starts. And then let's go into the era that we're living in. Charles, we'll bring you up to date when we get through the MTV time frame in the early 80s and 90s.
Sounds good.
Really, we bottomed out in the 90s here. And Greg, why did housing bottom out there in like January 91 at 798,000 units?
Well, I mean, because we'd run up over 2 million in the mid 80s, and we were tailing off. I mean, that bottom was the first Gulf War.
Okay. And that's basically about when I got into the business on this side, would have been like in 93 when we were just almost over 1 million again and working we had basically 1990 till 2005 or 2006, we peaked out at around 2.2 million again in January 2006. Greg, Matt, what do you remember? When did we start having a tough market like this one back then? Or how far do we have to go back to, like, say, to get back to a tougher market we've been in the last 3 or 4 months?
I'll just talk the most recent, I mean, when we peaked in 2006, I mean, the market was trended off from there. You didn't even realize that things weren't still okay, until probably pretty deep into 2007.
There's like a year, lumber rolled over first, if I remember right.
I mean, and then you had a situation in 2008. Bear Stearns failed in February. You went from, the beginning of 2008, you were only building. We were already down to 1 million housing starts. So, we're 20% above that right now. And then ultimately we fell to like, I don't know, 300,000 or something on a monthly basis. It was something crazy. But that was a nuclear winter for the housing industry. And, you remember back then, dozens and dozens and dozens of end users, distributors, manufacturers, went out of business or were bought up by competitors during that time period. And you limped around housing starts, you didn't get back up over 1 million until 2013. In 2013, we were grinding. Business was maybe getting a little better. 14. It wasn't really until 2016, 2017 that we got back anywhere near these levels of housing starts. And, those markets were characterized by mostly, sawtooth up grinding markets, which were actually, very healthy.
Greg, if you take away 21 and 22 and just go from 2014 to 2024, take out those 2 years, nothing's really changed. I mean, the business is $400 to $600 lumber, and that's
except for I think production is up pretty dramatically from that time period, right? Which was,
I think the biggest change. There's just 2 changes. One, China's not really a factor anymore, right? China has been a factor.
Right.
Asia in general has been an outlet for Western lumber companies for sure. From British Columbia all the way down to Northern California to get rid of some excess material. That's not really available anymore unless you just want to give lumber away. So that's one thing that's different now. The other thing that's different now is
different, Matt, is that back then and now, British Columbia lumber production is down 50%. Total lumber production is up. I don't know the exact number, but British Columbia lumber production is down 50%.
Right. I was going to say the main difference now from the production side is that the mills have taken all that COVID money and just dumped it into efficiency. So, all the Alberta mills, all the Oregon, Washington, California, Idaho, Montana mills, all the Quebec and Ontario mills, every single yellow pine mill, that either the new ones or even the old ones have either been upgraded or they were built brand new to be high producers. And so there's been a lot of production efficiency increases for our industry in the last 3-4 years because of that generational wealth that they basically stumbled upon.
And I guess that's
why. And then there's probably a little bit more euro coming our way than there was. For a while, the euros weren't super interested in our market, but I don't think they really have a lot of other options right now. So it's all eyes are pointed on the U.S. And in the meantime, our industry has become more efficient so they can weather the storm a little bit longer. Question is how much longer?
Well, in the South, it's death by 1,000 cuts, as you described. Basically, a duel over who's going to end up with the most market share.
So I guess I look at it. So if you're a listener out there and you're an end user, your retail, your retail yard, or you're a builder, you're a multifamily builder, what should they be doing today on as they look at the second half of the year? What should their strategy be?
Buy if you've got something sold and you can buy it at a profit, whether that's storing it or whatever you're doing, and that profit is acceptable to you at these numbers, I think you should take a significant chunk of chips off the table, in my opinion. I mean, you should always do that, and try to get transfer the risk to somebody to take that otherwise.
And then, so obviously intermediaries in the market for the most part are all in a, reduce their inventory, I guess I'm saying, hey, we're distributors and we're hedgers and we're talking about reducing our inventory. Those that aren't hedgers must certainly be reducing their inventory, or they
don't have a choice. Their boss told them that they have to, or they got let go, right? I mean, or both. So you're going to see more of that, more shakeouts.
We saw that, Matt. We mentioned a couple people, you and I kind of saw that the veterans getting released or going to other places, right?
That, and there's some sawmills with wood on the ground right now that are begging for offers. It doesn't bode well for them. Part of it is the one I'm thinking of in particular is a Canadian sawmill, and they probably want to clear some space prior to the new duty rates coming in, so they can refill those inventories with lower duty lumber. If they want to continue doing that, just selling lumber at 80 cents on the dollar, go for it. I don't care. It's your business, not mine. I don't think that's very wise personally, but I'm just a guy. There's some of that too.
Do you both think, is there a lot of inventory on the ground sitting in reloads right now?
I think there is an ample amount of inventory. I wouldn't say a lot. I mean, I've seen heavier inventory levels, myself included. I've had more wood on the ground than I do right now, but I do hear stories from other people, because I'm out there every day trying to sell what I have, and I have to compete. So I hear what other people are doing and are willing to do. And then when I talk to the people that manage our inventory on the ground, Hampton has people that actually live in the markets that we sell in, and they manage our inventory with eyes on the ball, right? Like a traveling salesman, except for these are traveling inventory managers.
Yeah.
And so they know, they see, because they're in their pickup truck driving around all these different reloads that we operate out of. They see who's got a lot of wood or who doesn't got a lot of, which reload's full, which one's not full, what type of the stage of the inventory process other people. So I get all that stuff. I just got to make a phone call and ask questions. But I think we're kind of medium heavy right now. Like, I wouldn't say heavy, but I think medium to heavy. And not for everybody. I don't think it's uniform throughout the whole chain. I think there's some people that have some problems, and then there's some people that don't. And we're just going to go through this period where the people that don't have problems sit there and fold their arms, while the people that do have problems just make terrible decisions. And then it'll be over and moving on.
Yeah, I think we're still heavy at some places. I think that's probably why you're going to see some people moving around. Fortunately or unfortunately in this industry, people walk away from bad positions sometimes, right? I mean, I've seen it over time. And some people just choose to go to a job but the whole theme is, this is one of the toughest markets we've been in. As Greg said, Greg, what's your thought? What do you do if you're an end user right here?
Yeah, so if you're end use retail yard, I mean, and you've got your inventories in line, there's no incentive to change the strategy that you have been employing, which is, buy based on your usage, keep your days of inventory at that, kind of optimal level, not too heavy, but there's no reason to go too light. If you're an end user multifamily, I mean, I'm in this wild card. It's, first half of the year, we're down 40 to 50% in multifamily. How much of a comeback is there going to be in the second half of the year at this point? Certainly at these price levels, to the extent that you can lock in and manage risk for Q4, there's no reason not to. And I mean, I've started to get some inquiry for Q1 2025, which that's always a real tough one, because it's like, hey, it's going to start in January 25. Well, that means it's a March, April start, really. And, by then, there's a lot of things can change.
Last year, Greg, if I remind you, last year you didn't want that business. And then in hindsight, you said you wish you would have taken some of that business. So are you going to have that in the back of your mind as you're starting to quote some January, February start stuff going in?
I hope not. I hope I stay disciplined. And the reason why I didn't want that business was there was no way for me to effectively manage the risk. And I mean, I try and stay disciplined. And I mean, I'm a human being, and so I make mistakes, but I really try hard not to take that emotional, I'm going to take that, and stay true to the discipline.
So the discipline of it right now.
I've been a little undisciplined in inventory lately. I'll just be free to share that with all of you. And, it's going to cost me a little bit of money, but I'm a big boy. I'm going to take my medicine right now. I'm going to take my medicine.
The board is telling you that if somebody wants to come to you and price a job for January, that it's a $50 to $70 premium over today's cash prices, correct? That's what the board's telling us.
Or more, depending on the item, because
let's just say two before, and let's just use 70 as a round number. Okay, so can you get $70 for a January start over today's price?
No.
Right.
Very simple. Simply put, no, you cannot. Going through it right now.
And the question is, do you want that business if you can't?
And it was like, I looked at it and it was like, man, this is like $25 over today's market. I'm like going, no, I can't make those numbers work.
I don't think that would be very wise personally. And just my gut feeling is that you have an election coming up. Things are going to change one way or another. We're going to see change. I wouldn't want to be short a bunch of plus 25 business for January, February, bleeding into March starts.
I think I think my big question in general right now is if I go under the assumption is like, hey, yeah, prices are probably long-term unsustainable at these levels. So there's going to be a drip, drip, drip. And, there always is a lag as you lose production. And my big wild card is what's the demand number for the second half of 2024? If we're through the first 6 months, single family up a few percentage points, multifamily down 40+%. Repair and remodeling, question mark. What is that? Is it down 3 to 5%? It's definitely down. It's not up.
Who can we get on to really give us real-time R&R data?
Retail,
that seems to lag by
retail.
a quarter all the time.
Big retail.
Yeah.
Gotta be.
That's let's do it. Well, any listeners that have some input on that, we'd love to get that feedback because I think that's an important part of the market. I mean, repair and remodeling is probably the largest consumer of lumber now.
Well, and the one thing we noticed is the availability that we've never seen on lists and even getting shipped, select, premium, all the high-end grade stuff that, we used to walk into the butchers and just get the ground beef, and now we're getting the prime rib, grass-fed, grass-finished stuff.
That's a function of two different things. One is what we talked about, the mills spending all this money increasing their efficiency. Well, guess what? When they increase their efficiency, they start pulling more premium. So maybe you were able to get 30% premium out of the log before, now you can get 50% premium. So the extra 20% premium, it's going to go into the open market as either a number two or as a premium, sold as a premium. But if they can't sell it as a premium, it'll just get bundled into some number two, like MSR does sometimes, right? So the industry's gotten more efficient at producing that kind of lumber at the same time that consumption of that lumber is at best flat. So even if it's just flat, which we're seeing flat, and other people like Greg has talked about are seeing down. Well, if it's flat to down and you have more production of that product, well, that's why you're seeing the premium being offered to you. It's really that simple. Plus, the Europeans have probably eaten a little bit of market share too, right?
Definitely.
Yeah, I mean that's another wild card. We saw Euro slow in the second quarter. How much further is it going to slow in Q3? Right? I mean,
it feels slower too, doesn't it? Right now, I mean, it just feels slower from what we're seeing coming over everywhere.
You're talking about Europe?
Yes.
Yeah.
I'm not seeing near as much of it. I get offers here and there, but it's mostly just secondaries trying to get rid of stuff. As far as the mills coming at me and saying, "Hey, we want to do a deal," I'm not getting a lot of that at all.
Yeah.
I don't think they're very happy with these types of prices.
No, absolutely not. All right, what do you want to close with, Ash? What do you think?
I was going to close with, let's just go around the horn. We've got a lot to be grateful for this week with the holiday. Let's just go around and see what do you all think this week is probably in the books. We'll be in Friday doing maybe a little bit of stuff, but what do you all feel?
I got a couple of things I wanted to share. One is I wanted to go RIP to D.R. Horton, who passed away this last week, a young man of 74 years old. What a great story if you get a chance to look at it. He started begging a guy for, 20-something years old, begging a guy for a loan to build a house, and he turned it into the largest home builder. It's one of the things is why this is such a great country. The other is, and I'm going to go a little bit out on a limb here, but I just feel like I want to make this point. The Supreme Court just ended their session, and there's been a lot of talk about unhappiness with the Supreme Court. But I did take a look. 50% of the Supreme Court decisions this year were unanimous decisions, and of the other 50%, almost half of them were split decisions on ideological, i.e., they didn't line up with the ideological makeup of the court. And so, I just look at that and I go, wow, there again, what a great country we have to be able to have that. And so it's 4th of July, and we should all like celebrate what a great country we have.
Here, here, baby.
I love it.
As a
Agree.
guy that served 6 years in the military, I always say this to my children. I'm like, you know what? The worst you can do if you don't like who the president is 8 years. Don't worry about it, man. It's not that big of a deal. Most of what we complain about in life and politics is on the national level, but most of what actually affects your daily life is on the local level. So if you really get bent out of shape about what's going on in the world politically, go talk to your city council. Go talk to your zoning guys, go talk to your local politicians, because that's who's actually going to have a real impact on your life, not who the president or who your senator is. Those guys do virtually nothing that's going to affect you. It's all just for show, and people miss the big picture in reality.
But the other thing is, if you don't like anything to do with politics, turn off cable. Turn it off.
We did that a while ago.
I did that 2 years ago.
I mean, it's poison.
Yeah. My public service announcement is make sure tomorrow's a day where everybody lights off fireworks. Make sure all your pets are locked up and safe in the house. July 4th is a year where pets go missing because they're scared and run away. So, and also spay and neuter all your animals.
Charles, you have like a lot. You got a lot of ammo down there for tomorrow, man.
Oh,
you got a big pyrotechnic deal going on.
Yeah, we've got big fireworks. But the problem is it's so dry here, we probably won't shoot them off, honestly.
Oh, real?
I mean, it's bad.
Okay.
We haven't had. I mean, all week last week, heat index was like 105. I want to say on average.
Wow.
No rain.
So you're not gonna break the big boys out then? Tomorrow.
No, sir. Unfortunately, we did last year though. It was a lot of fun, but not this year.
Matt, Charles, Greg, hope you guys have a great 4th. All you listeners have a great 4th also. Hopefully we'll get this out before tomorrow.
Happy birthday, America.
Yeah.
Here.
Thanks for having
us. Always great having you.
All right, bud.
Thanks, fellas.
See you guys later.
Thanks for listening to this week's episode of The Lumber Word. The Lumber Word podcast is dedicated to engaging conversations about the lumber industry, including trading ideas, market trends, and evaluations of overvalued and undervalued assets. We wish to emphasize that the discussions and opinions expressed in this podcast are purely for informational and entertainment purposes. They should not be considered as financial or investment advice. We encourage our listeners to make their own financial decisions, taking into account their unique circumstances and financial goals, and to seek professional financial advice if necessary.